In the Philippines, the picture is slightly different, and we project our economy to grow by around 7% in 2023.
Well, I do think the Philippines will be actually the winner, as we could put it, because it's going to grow more than India this year.
The International Monetary Fund upgrading its growth forecast for the Philippines, now seen posting the fastest growth among emerging and developing Asia peers.
The Philippine economy is projected to reach $1 trillion by 2033. This makes the Southeast Asian archipelago one of the world's most promising new markets. The Philippine economy increased 7.6% in 2022, the highest rate since 1976. The nominal gross domestic product of the Philippines is projected to reach $1 trillion by 2033. Because of this, the Philippines will rapidly expand to become one of the region's most important emerging markets. The average yearly GDP per person has increased considerably over the previous 2 decades, from less than $1,000 in 2000 to a projected $3,500 by 2022 and more than $6,000 by 2030. The International Monetary Fund predicts that the Philippines' economy will expand by 6% in 2023, while rising inflation poses a threat that must be mitigated by fiscal and monetary policy. The IMF has revised its prediction for GDP growth in the Philippines for next year from 5.8% to a range of 5.5% to 6%. What causes a rise in the Philippine economy? Stay tuned to find out who's responsible. In 2022, after initially suffering from the effects of the COVID-19 epidemic, the Philippine economy saw its best growth rate since 1976. The Philippines' GDP growth rate of 7.6% in 2022 was on pace with some of the world's fastest developing, significant emerging markets, such as oil exporting nations like Saudi Arabia and the United Arab Emirates, and quickly rising Asian emerging economies like Malaysia, Vietnam, and India. The Philippines' economic performance has likewise greatly improved over the previous decade, despite massive disruptions to economic activity caused by the COVID-19 epidemic during 2020 to 21. The Philippines' annual real GDP growth was between 6% and 7% from 2012 to 2019. In 2022, real economic growth at its highest level since 1976, thanks to an increase of 8.3% in household final consumption expenditures and an increase of 16.8% in gross capital formation. According to data from SAMP Global, expansionary circumstances persisted in the Philippines' manufacturing sector in March, with a value of 52.5 indicating growth. This was down from the 5-month high of 53.5 in January. Production increased for the 8th straight month. Production rose after an increase in orders. Due to material shortages and congestion at the ports, supplier performance dropped even further. There was an uptick in incomplete tasks because of the delays in delivery. A major worry for the economy in the expected future is broader inflation pressures. While March's headline CPI inflation rate of 7.6% Y was lower than February's 8.6% Y/Y rate, it was still well over the Bangko Sentral ng Pilipinas inflation target range of 2% to 4%. In 2022, the BSP increased the interest rate by 350 basis points. The BSP Monetary Board increased the interest rate on the overnight reverse repurchase facility by 50 basis points to 6.0% on February 16, 2023, in response to persistently rising inflation pressures. On March 23, 2023, the rate for the overnight reverse repurchase facility will increase by 25 basis points to 6.25%. Average CPI inflation is expected to rise over the 2 to 4% goal range in 2023 to a projected 6.0%, before falling back within the target range in 2024 to a projected 2.9%. Debt to GDP ratio deteriorating. In 2022, exports of goods saw a mild year-over-year growth of 5.6%. The export industry remained robust, despite the slump in mainland China, an important market for Philippine goods. In 2022, exports to mainland China fell by 5.1% year-over-year, but exports to other major countries grew. There was a year-over-year increase of 4.2% in exports to the United States, 17% in exports to Singapore, and 21.5% in exports to South Korea. In the second half of 2022, the Philippines saw a decline in its electronic exports, which make up around 56% of the country's overall goods exports. In December 2022, the export of electronics items fell by 13.9% year-over-year, while the export of semiconductors fell by 12.8%. Imports increased by 17.3% year-over-year in 2022 as a direct result of the increasing cost of global oil and gas. This resulted in a wider gap between imports and exports of $58.3 billion in 2022, up from $37.1 billion the previous year. Weak growth in the United States and Western Europe in 2023 poses a threat to the Philippines' export industry. Recovery in mainland China, however, is anticipated to lessen these dangers. A record $11.6 billion, or 3.2% of GDP, current account surplus was recorded in 2020 as a result of a sharp drop in domestic demand. In 2021, the current account deficit reverted to a level of $5.9 billion, or 1.5% of GDP, as domestic demand and imports increased. According to BSP data, external debt accounted for 26.8% of GDP in September 2022. In spite of the effects of COVID-19, the stabilizing effect of remittances from overseas Filipino workers, which account for about 10% of GDP, has been felt throughout 2020. Remittances sent home by employees have a significant impact on consumer spending in the Philippines. Although the consequences of the epidemic on tourism and aviation have caused anxiety for employees overseas, remittance data for 2021 shows strong inflows. The sum of $34.9 billion that expats sent home in remittances in 2021 was an all-time high. The total amount of money that foreign employees sent home in 2022 was $36.1 billion, an increase of 3.6% from the previous year. The fast expansion of the BPO industry in the Philippines has benefited both the economy and overall exports. According to BSP projections, and BPO exports would rise to above $25.1 billion by 2021. Revenue from and BPO exports is projected to reach $27.4 billion in 2022, up 9.1% from 2021. Economic outlook for the Philippines. Despite the COVID-19 Delta wave in the second half of 2021, GDP growth returned to 5.6% Y for the whole calendar year. Strong growth has persisted, reaching over 7.6% year-over-year in 2022. Domestic and international tourism have already begun to return after being closed due to the epidemic in 2022. If this pattern persists, the economy may see significant growth in 2023. In 2019, both foreign and domestic tourism were predicted to contribute 12.7% to GDP through their respective gross direct value added. An estimated $549 billion pesos were spent by foreign tourists, while $3.1 trillion pesos were spent by locals. Given the large contribution domestic tourism makes to GDP, its potential rebound in 2023 might be a major economic driver. It is anticipated that 2023 will be another year of robust economic expansion. Production and new orders in the manufacturing sector increased in March 2023, according to the Sant Global Philippines Manufacturing PMI survey. It is anticipated that the revival of the tourist industry, the ongoing influx of remittances from overseas workers, and the rapid rise of BPO exports will all contribute to economic growth momentum in 2023. According to the and Business Process Association of the Philippines, there were 1.57 million Filipinos working in the and business process outsourcing sector in 2022, with total sales of $32.5 billion. With its educated workforce and high level of English proficiency, the Philippines has great potential to expand its and business process outsourcing industries. Consistently robust private consumer expenditure, an uptick in government infrastructure spending, and an improvement in remittances should all contribute to GDP growth of 5.8% annually in 2023. The GDP of the Philippines is expected to double from $400 billion in 2022 to $800 billion in 2030. Based on current projections, private consumer spending is a key driver of economic growth, and it will increase as urban family incomes rise. By 2033, the Philippines is expected to be among this group of Asia-Pacific's major economies. Together with mainland China, Japan, India, South Korea, Australia, Taiwan, and Indonesia, The economy of the Philippines is likewise forecast to rise fast, from $3,500 in 2022 to $6,200 in 2030. The resulting influx of foreign and domestic investment will further support the expansion of the local consumer market in the Philippines. The Philippines stands to gain from both its membership in the newly adopted RCEP Trade Pact and its extremely favorable rules of origin, both of which will contribute to the growth of industrial supply chains in the RCEP area as a whole. Investment in a wide variety of industrial and infrastructure projects will be more attractive to potential FDI investors in RCEP member countries, especially in low-cost manufacturing centers like the Philippines. The economic outlook for the Philippines for the next decade is bright, with major development gains anticipated. The Philippine government estimated that in 2021, 18.1% of the population, or 20 million people, would still be living in poverty. Rapid increases in per capita GDP and living standards over the next decade should result in widespread improvements in human development indices and a marked decrease in severe poverty. That's all for today. Thanks for watching this video. I really hope you enjoyed it. Additionally, if you're new to this channel, I strongly encourage you to subscribe and click the like button. You can also keep up with all of my most recent videos. See you in the next one.